Hi, welcome to another episode of 2 Minutes on Tuesday. This week's episode is not going to be about buying or selling a home. It's going to be for those of you who have already bought a home who are paying mortgage insurance. Mortgage insurance, you may remember, is if you didn't have 20% down at the time that you bought your home, you were required to pay private mortgage insurance in most cases. And if it was an FHA loan, you're paying something called mortgage insurance premium. And what that is, just as a refresher, that is to insure and protect the lender in case you default on the loan. Since you don't have 20% down, the bank's guaranteed to lose money if they have to foreclose on the property. So this insurance helps offset a portion of their loss. So it doesn't benefit you as a buyer or a borrower, except that by having mortgage insurance, it enables you to buy a home without saving 20% for a down payment. So you can buy a house much sooner and you don't have to wait until you save that cash. Now, the purpose of tonight's video is twofold. The first one is if you bought a house, say 2 or 3 or 4 or 5 years ago or longer, and you're still paying mortgage insurance, there's a very good chance that the value of your home has gone up enough that you might be able to get rid of your mortgage insurance, period. You might be able to get rid of it. Or you might have enough equity in your home, and if your interest rate's higher, you might be able to refinance your home. Let's say you're at 6% interest. You might be able to refinance your house and be in the low 3% range and not only save money on the difference of the interest rate from 6% to 3% as an example, but you can also save money by getting rid of your monthly mortgage insurance that you're paying. Now, I want to caution you, if you're planning on selling your house in the next 2 years, maybe even 3 years, this probably is not going to be a good idea to do a full refinance because you'll have the closing costs all over again. If you have a conventional loan and you're paying mortgage insurance and you've had the house, like I said, 2-3 years or longer, over the last 3 years, the values of homes in Knox County have increased by more than 10%. So if you put 10% down when you bought your home, the value of your property has also gone up at least 10% in that period of time. You should have 20% equity already. And again, it's all dependent on what your house would appraise at if you had an appraisal done today. Some houses have gone up 20%, 25%, 30% in the last 3 or 4 years. And for that reason, this video is to help you try to save money and not pay mortgage insurance if you don't have to. Again, if you're going to sell the house, it probably doesn't make sense to refi, but it still might make sense to get rid of that mortgage insurance if you've got enough equity. So I just thought this would be helpful because a lot of the clients that have bought houses from us have not had 20% down, and this is a way for you to save money. Now, I'm going to give you a side benefit. Let's say you're going to stay in the house 2 or 3 more years, but you don't want to refinance, but you can get rid of the mortgage insurance. Let's say that mortgage insurance is $60 a month. Imagine if you took the $60 a month from the mortgage insurance that you're currently paying and applied that $60 that you're used to paying. If we could get that removed from your loan, you could take that extra $60 and apply it towards the principal balance of your loan, meaning more money each month is going to pay towards your balance, which means you're going to build equity faster so that when you do decide to sell the home, you're going to obtain more cash net proceeds out of the sale of the house that you can use towards, if you're going to buy a nicer, bigger home, you're going to have more cash out of the sale of your current home to buy your next home. So I'm Sam Miller, RE/MAX Stars Realty. Hopefully this is helpful. If you have questions, feel free to give us a call. We are happy to help and hope you're doing well. Talk to you soon. Bye.